Economic collapse news. Bad mortgage loans are back. Let me say this again. Bad mortgage loans are back and they're here to stay for good. And the reason is Trump wanted to roll back the Dodd-Frank Wall Street Reform Act. For many people that are not in the industry of real estate, as many of you guys may know or may not know, I'm a real estate investor. I've been doing this since 2016, the last crash. And our Congress created a law to limit the power of bankers. Because if you guys don't know, in 2006, bankers did predatory lending. They lent to a bunch of people that couldn't afford it. They lent to a bunch of people that didn't understand adjustable mortgages. They didn't understand that there was prepayment penalties, all kinds of crazy stuff, balloons, and so on, that people didn't understand, like interest-only loans. And so what happens is that the bankers conned a bunch of Americans, millions and millions of Americans, to collect their down payments, to collect their monthly payments, and they stuck them with bad loans, horrible loans, toxic loans. In this case, mortgages for their homes, people's actual homes, their kids, their wives, their dogs, etc. And then what happened is that many of these homeowners were defaulted because they really had bad mortgages on their home, like they were just making interest only payments, which that means that the principal, the debt balance, never gets reduced ever. Okay, or they had situations where they had balloons, or they had a situation where they had adjustable mortgages. They had a situation where if they paid off the loan, they would be hit up with a big prepayment penalty, and so on and so on. So it created a lot of chaos. And so since 2006, the economic collapse, or in this case was a recession, was almost melt down the whole system. Big Brother had to go bail out a bunch of too big to fail banks, like Bank of America, give them $120 billion, and so many other banks. And since Big Brother, which is basically me and you, had to go bail out GMC, Chrysler car dealerships, because they're too big to fail, then they put laws in, because not only were we getting taxed, but we also had to do the bailouts. And we also were paying the penalty of inflation to the Reaper, the Fed, because of them printing money. They put laws like Dodd-Frank Wall Street Reform Act to prohibit bankers doing bad loans, bad mortgages. And right now, thanks to Trump, Congress has passed, actually in 2018, the rollback of Dodd-Frank. And now that they have rolled it back, what's happening is that I am seeing sellers in today's market, where there's 2% interest rate, 3% interest rate, 4% interest rate, having house mortgages of 7% interest rate. And I'm also seeing homeowners with mortgages that have adjustable mortgage. And for example, that means that don't make payments for 3 years or 5 years, and it adjusts really, really high. And I'm also seeing a lot of VA loans. Like I'm talking to a lot of sellers. Like, where am I getting my information? I'm not getting it from the New York Times. I just brought it to you guys because some of you guys don't believe when I tell you, hey, the Dodd-Frank Act was rolled back. So I want to show you somewhere where you feel like, quotes, credible, like the New York Times, so I can show you this is really happening. And so let's quickly look at this. It says that the banks are extremely happy, right, that this law is rolled back, because it relaxes the situation for bankers. Your bankers can now get away with murder. And the vote was passed by 258 senators that wanted to roll back this Consumer Protection Act. And basically, it says the lawmakers and the bank lobbyists, basically majority bank lobbyists, bank industry, bought the lawmakers, and they were cheering because it unshakes the banks, the economy, from regulate a burden. So basically banks can do whatever they want, and they do whatever they want. For example, they say you go for apply for a mortgage and say, well, the interest rate is this, and by the time you come to closing, the interest rate has gone up points, and what people don't understand is even if it goes up 0.03, that's going to be thousands of dollars over the 30-year amortization scheme. So the bankers are extremely happy. This is a big win for them, guys. And why is it a big win for them? Why is this a big win for Big Brother? Why is this a big win for central bankers? Well, for Big Brother, they could shammy the economy to keep going forward. Why do they have to go and unregulate the bankers? Well, because like I said, in 2016, that the market's about to crash, so they had to go do stimulate. They had to go modify. They had to do all this crazy stuff to be able to not allow the market to crash. And some of the crazy stuff they did is roll back the Dodd-Frank Act. Some other crazy stuff they did is they modified the debt to income ratio for a borrower or someone that wants to buy a home. Some other stuff they did is alleviate some of that debt and how it affects credit, like student loans and so on and so on. And the whole purpose of this is that bank lobbyists, the bank industry doesn't want to get regulated. Like me and you, if we're driving, we don't put our signals on, me and you'll get a ticket. Well, there is no regulation for banks, and they like to keep it that way. And thanks to Big Brother and thanks to lobbyists, they want it that way as well. Because again, we are the working class. We are going to be the one that has to pay the bailouts, that has to pay the inflation, has to pay the mistakes the central bankers make, because they are greedy and they want the most amount of bonuses for top management and salaries, and they don't care about their community or even their own employees, versus me and you. So the truth is now bad loans are out. I am seeing a lot of VAs, guys. This is a good point. A lot of VAs, which is a veterans loan, are able to buy homes with no money down, like zero money, dude. Like I talked to a seller just yesterday. She just got into a home. She didn't have to pay for the closing. She didn't have to pay no money. Just got a home right now. And you know what? Guess what? She has a lot of debt on her credit cards, and now she's paying the reaper because she can't afford the house. She can't sell it because, it was appraised at such a high price. And since she didn't have any skin in the game, she didn't have to put 20% down or even 3.5% down in the FHA. She just walked in. There's no skin in their game to stick around, and she just wants to sell it, and she can't sell it. She's been trying to sell it for a year. It's above the average home, and that's going to happen is this house is going to go to foreclosure, or it's going to be she's going to meet an investor like me that offers the solution where I create a win-win, and she becomes my private bank. But if not, this house will go into foreclosure. I foresee it. I don't have a crystal ball, but I foresee it going into foreclosure from my past experiences dealing with sellers in the same exact situation. Because as the market tanks and prices keep dropping and dropping and dropping, she's going to have to bring more money at closing to sell with a retail buyer, and eventually she's just going to let it go to foreclosure or try to do a short sale or loan mod, and it probably won't happen, just go to foreclosure anyways. So either way, it doesn't matter if you're putting the 20% down. Like I talked to a seller yesterday. I talked to a seller today. They both got a conventional loan, put 20% down, and they've been trying to sell their home for, again, over a year, and they're highly motivated now. So it doesn't matter if you put 20% down, or it doesn't matter if you just got into the home, like with a VA loan, you have to put nothing down. Either way, the homeowners have to pay the reaper, which is the banks, one way. The people that put the 20% down will pay the reaper up front, and then they'll pay the reaper at the end, because the banks are allowing other people to get the same asset with 0% down, and these people with the VA loans don't have no skin in the game, so they don't mind if the house goes to foreclosure, which therefore hurts the guy that's putting the 20% conventional down. Okay, which is a very important part, because there's a lot of people that have equity, and their equity is going to get vaporized because of the flood of inventory of sellers that just don't give a rat's ass because they didn't put any money into the deal. They just got a house, right? And sure, if it goes to foreclosure, okay, that's all right. I'll have my credit hurt for 7-10 years, but they're not thinking that far ahead. But what really hurts is the people that actually did it right. They got a conventional loan versus a VA or FHA where they have to pay PMI and etc. So people that did it right will get hurt because of the actions of people that did it wrong. And the people that did it wrong, not only are they going to get burnt, but they're not going to get burnt in the front end when they got the house for no money down, but they're going to get burnt at the end when they pay the reaper and the house goes to foreclosure with the credit. And the people and the people that got it, with nothing, they with nothing down also contributed to the real estate collapse, to the real estate asset price inflation, because the assets are just going so much. The real estate the value is going up so much because there are so many people that don't have no money, but they're able to buy houses with no money down through these programs that the government subsidized, like VA or FHA. Okay, so that said, bad loans are here, which is a big sign of the economy meltdown. And once these people start defaulting, it's going to be a domino effect with people that have great equity or decent equity, or did put 20% down, or they put a large amount, $50,000, $100,000 down. It's going to affect them too. So guys, if you're interested in how to find these motivated sellers and get passive income, become a landlord, or even do fix and flips, or if you're interested in wholesaling deals, then you should definitely get into my profit sharing at mrnofluff.com. If you just want to get my courses, I have a lot of good books about real estate, then you should just go to myrealestatedojo.com. myrealestatedojo.com. If you're interested in the profit sharing, go to mrnofluff.com. And if you're broke and you don't have any money, then I have this great side hustle. It's called the New Flip. I teach you how to turn $100 into 2x, 3x, 4x, 5x, 6x, all the way to up to 7x. That's the most I've ever done, but maybe you can do more. And if you're interested in the New Flip, go to thenewflip.mrnofluff.com, thenewflip.mrnofluff.com, and you can download it right now for just $67. It's a whole franchise. I say franchise, but it's like a franchise without the franchise fee or all the upfront money. It has all the systems that you need. All you got to do is copy and paste and take the action, and you're able to potentially turn your $100 into 2x, 3x, 4x, or lose your $100. But it's better than starting a business and getting into $300,000, $400,000 in debt, and then realizing that, hey, you can still lose it. So with this game, the New Flip is a game that teaches you about business, entrepreneurship, real estate, with only risking $100, and with the potential returns of 2x, 3x, 4x, 5x, 6x, 7x, the most I've ever done. But hopefully you can do more than I have. And I like to get you on my YouTube channel so you can tell your success story. Guys and gals, if you downloaded a New Flip and you had success, message me. I like to get you on my YouTube channel so you can motivate other people, guys and gals. Anyways, guys, thanks for watching. Click the like button. Don't take no for answer. Remember, we're living the best country ever, and we're at the best time, in my opinion, not financial advice, to be an entrepreneur, to be a real estate investor, which is the crash when there's blood on the streets. Peace.